Hey everybody, Josh Sigurdson of World Alternative Media here, and of course I'm joined by author and economic analyst here at WAM, John Sneisen, and today we're going to go into the UK real estate market. So John, can you start us off here?
Yeah, well, what's interesting with the UK real estate market right now is it's been going up like crazy. It's been very unsustainable housing prices in the UK, especially in London. But of course, now when you had the Brexit vote, now they're yelling, oh, it's because of Brexit. It's because of Brexit. They're so full of shit. It's unbelievable.
It was a ticking time bomb to be.
Yeah, of course it is. And there's lots of real estate markets that are highly unsustainable right now.
Yeah.
Actually, one of them is in my home country in Oslo. There was a 17 square meter apartment, about 170 square foot apartment, going for about 3 million the Canadian dollars.
Oh, wow.
And that didn't even have a bathroom in that apartment. But that's the insanity of that's kind of like where you're heading to the top of a real estate bubble. And then of course you have interest rates play a huge role in real estate, because that's why they're constantly pushing it down, is because they're afraid that if interest rates were to go up, it would be havoc in the real estate market right away. So that's why they're constantly saying that, we have to push down interest rates, and that's why you're going to see Mark Carney probably right away, our Goldman Sachs bastard from Canada, destroying the property markets further by actually going into zero or negative interest rates in order to try to save whatever is left. But of course he's not going to save anything. It's just going to get worse and worse, and
just continue manipulating problem reaction solution
until it completely collapses. Actually right now we're in a collapse. Prices are going down quite drastically just in a little bit of time, and what that has prompted, it prompted a lot of UK property funds to freeze their capital, so you can't withdraw money from your funds that you have money invested in. And this is very curious, because this happened in 2008 as well with several real estate and REIT funds and so on here in Canada. I was in investments back in 2009, 2010, and we always had the danger of being in RSPs, and especially in these REITs and so on, where you actually are not close to the asset itself, and that you just invest in this, and then suddenly property prices goes down, and then what happens is they got to freeze the assets, because if people withdraw the money, the whole fund will collapse in on itself. Now I'll tell you some facts about what's going on in the UK property funds. Aberdeen actually just marked down their value 17%. That's quite substantial for a fund.
That's massive.
It's huge. Henderson, Columbia, Threadneedle, and Canada Life, they suspended in total $5.7 billion of funds that people cannot withdraw. And this, as I said again, it looks very much like the Bear Stearns pre-Bear Stearns crisis, where they started to freeze funds as well here in Canada and other places around the world that was affected by the funds, the real estate bubble in the United States. Several places. It's actually a total of $23.4 billion, 80 billion pounds that are frozen right now in withdrawals in different real estate funds. Legal and General, on last Thursday, they froze 2.3 billion pounds and marked down their fund 10%. And then office values is predicted to go down 20%. I think it's it's gonna not go down 20%, and they say over the next 3 years, experts. But I believe when a collapse just happens, those property values might drop 50-60%. And so on, right? So it's very dangerous precipice that we're at in the UK right now. That could actually be one of the catalysts behind the collapse coming. There's so many snowflakes that are gathering up on that big hill, and we're all down here, in the middle of the crevice in the valley, just waiting for that massive
the avalanche. A couple of snowflakes doesn't seem like a big deal, but together it can be quite dangerous.
Exactly. And we don't know, there's always one little snowflake that triggers that whole disaster, and there's so many. And I think the UK property bubble could potentially actually be one of those snowflakes that brings the whole world economy down the system, because it's so over leveraged. It's just insanity what's going on in the UK. And I want to go in like one of the reasons why, like this is of course like a lot of office buildings and so on that these guys have invested in. There's not too many like rental units like for residential and so on, but mostly offices, and they are the ones that get hurt the first, because you know, when shit hits the fan, there's always, you know, businesses get hurt first, because they're the ones that get the money last, and then, you know, the whole thing like residential and everything comes after, because people can't get paid when the business goes bad, and so on, and it's just a vicious cycle. So the reason why they actually are getting into this trouble is because of a whole bunch of horrible policies by the UK government. They of course had the Help to Buy scheme, which I'll tell you some quick facts about it. You could have as little as 5% down on a £600 mortgage, which is like property has become so pricey in the UK that they had to push this in order to get people to buy more houses. Or when people are not buying more, you know, the supply and demand here, when they're not buying more, you know, those prices are going to come down, and that's what they're desperate to keep up. So they, of course they want to help people to buy buy houses, which is completely unsustainable. Most of these mortgages that were given out, and Max Kaiser talked about this a lot, he say it's completely unsustainable where they're at. And of course, like I'll talk a little bit about the 3 types of Help to Buy schemes that they got going in the UK. One is the equity loan, where the government lends up to 20% of the value of a new built home. So actually they give you 20% actually of that whole mortgage. That's quite insanity. Like when you think about the government gives you 20% of your house. So it comes out of government coffers, and the taxpayers have to pay for this insanity, where they actually just you know, give a whole bunch of money for people so they can buy a home, because when, as I said again, when that whole thing stops, it just collapses the whole market and the prices will go down. And then of course it's the Help to Buy mortgage guarantee will run until 2016, they said, but like it's still going, and it enables lenders to offer home buyers 80 to 95% loan to value mortgages. So actually they like when the mortgage is so high, you know, on the house, that you borrow 95% of the complete value of the house, it's very dangerous practice. You know, you're so over leveraged, so just a little dip in the price, it's just going to keep you in negative, what they call negative equity, where you suddenly have you actually owe more on your mortgage than the value of your house, which is insanity. So like those mortgages are quite dangerous. You know, 60% is usually where the good investors, when they invest in real estate, that's what they do, loan to value. Anything above that is dangerous for them. So that just should tell you like that the government are enabling that. And then the New Buy aims to help buyers who have a deposit of at least 5% to buy a new built home, so they could actually get into new built homes, and so on. So it's just a whole bunch of massive amounts of support in order to keep this property bubble up and running. And then of course the right to buy, which says, it states the following: we encourage more tenants to exercise their right to buy their council house by increasing the maximum discount that buyers can get off the market value of their home to £75 outside of London and 100,000 within London. Further increases to the discount were planned for, it says summer 2014, but there again they discount the house, and here you buy a house for a discount, and still with that discount, like you're risking very heavily to be in negative equity when the whole thing crashes. And we saw what happened in the United States when the negative equity happened. People just walked away from their houses. It was game over, and the banks were sitting on millions upon millions, and there's still lots of horrible debt that the Federal Reserve in the US holds right now in mortgage-backed securities that they bought in order to keep the banks from completely collapsing, because if they let them have those bad mortgages, the banks would be out of business, like Wells Fargo, like a lot of the big ones would have been completely out of business.
And of course, people are still suffering to this day after what happened in Detroit and places like that. And now, and excuse me if I'm a little twitchy, there's mosquitoes biting me all over the place. But you mentioned the bubble. I know it's hard to put an exact pinpoint on it and say this is going to happen at this time, because of course the markets are so manipulated. But do you think that this bubble is going to burst in the next couple of years?
Oh, 100%. It's unsustainable. A lot of real estate markets around the world. Even here in Canada, we got huge issues here with Vancouver and Toronto being massively overvalued right now. And of course, we're coming to here in Winnipeg as well. It's not as bad, but it's definitely like getting there here in Winnipeg, Manitoba as well. We're really getting into a point where they're just trying to push any assets up. Like the main reason for these central bankers to get the game rolling and keep this, still going, the whole system, is to prop up real estate prices and stock prices. That's their main goal.
And Vancouver,
and their main function.
Vancouver, unbelievable. Vancouver is just it's one of the worst I've seen in person anyway.
Yeah, and Vancouver was also driven by a lot of foreign capital. Actually, London as well. There was a whole bunch of foreign capital coming in. In London, I know there was a whole bunch of massive, mansions that was bought up because of a property. They're also a tax haven. So they were bought up, and there's nobody living at these properties. I've had personally experience here in Winnipeg, even in Waverly West area, which is a new subdevelopment here in Winnipeg, where I was out installing home automation in people's homes, and I met this one guy always when there were different owners, Chinese owners of these houses, but I met the same guy several times at these locations, and the owners weren't even there. They just moved their capital out, and some of this capital comes from corrupt officials that have moved out, wanted to get money out of the country, and then of course they see real estate being a commodity. It is actually a depreciating commodity. Like, real estate prices should not go up. Actually, the reason why real estate prices are going up is just the supply versus demand again. But it's fake supply and demand. It's where they're trying to tell people oh yeah, you should definitely own a home. Everybody needs to own a home. Well, everybody can't own a home because everybody can't pay down that mortgage. And the problem is they got to keep the ball rolling and have a constant feed of more mortgages into the system to pay.
And we've seen with places like China, the amount of building involved versus the amount of actual demand. Their supply is far bigger than their demand.
Talking about real estate bubbles, that in China is just freaking horrible.
Well, they're building ghost cities.
It's insane. Like, here we have ghost subdevelopments, in Detroit and so on. They, had to bulldoze down properties because they were just rotting.
Do you think it's communistic enough in the United Kingdom for them to ever get to the point where China is, though?
I don't think so. I don't think they're going to go that crazy.
There's going to be a lot of suffering involved, though. Of course, the bubble is going to burst, and a lot of people in the United Kingdom are going to be hurting.
Definitely,
And of course, they're going to blame Brexit because it's easy instead of actually doing the research.
Yeah, it's a fantastic. and they also, the banking system. We were talking with Rob Kirby here, too, about, the banking system. They're trying to use a scapegoat, right? And the scapegoat is now Brexit. It's a perfect example of how they can say, it's Brexit's fault, while everybody else is well, this was unsustainable from the start.
What about all this crazy planning? Oh, well, but Brexit is now, and it's easy to blame it on, right?
Yeah, and it all comes back to the lesson, and real estate people know this. Don't buy a house that's when there's cycles in the real estate markets. There is, when people get in, when it's really cheap, and then, it goes up like this, and then it comes up here, where you're at the top, it's time to exit. The real estate investors know this, and then of course it's the flattening, and then it's the downturn again, and it just happens like this. It goes up and down. But again, real estate doesn't really have, when people say real estate goes up, it's kind of bullshit, because it's the value of money also that gets your money has been devalued as well.
Yeah, massively manipulated. So, of course, we can't give advice legally because, of course, we need those Keynesian government degrees and all that kind of stuff. But, like, for the folks out in the United Kingdom who are watching this, who might be affected by this, how can they keep themselves safe? How should they take precautions in order to, stay away from this housing bubble?
Well, first of all, don't get into a mortgage when it's unsustainable. Like, for example, like when I bought my house, I bought it at, what was my loan to value? I think it was about 70%. So I was a little bit on the high side, but I had 70% loan to value on my house. And don't buy a house that's not you got to look at that loan to value. Like people, the thing with people and what they don't understand, your house is not an asset until you actually have somebody, you rent it out and somebody lives in it and then pays your mortgage. Yeah. It's Robert Kiyosaki is famous for this, saying, your house is not an asset. He was crucified by people for saying that. And the reason why he's saying it is because it doesn't create you any money at all. The only time it might create you money if you were lucky and you sold it, but that's the only time when it's an asset. It's not an ATM that you draw money out of to go on vacations and so on. Yeah. It's very dangerous. It's been a very dangerous place where people, the real estate prices were increasing, and then people is like, oh, I could just, remortgage my house, and then I could take up money, and then I could go on a nice vacation. Instead of actually, you could have, taken money out of your, the equity, taken it out, and then actually bought gold and silver and other real wealth protectors instead of going on that expensive vacation and squandering your money. It's very important to understand that real estate is. It is a dangerous game, and there's always losers and winners in real estate, and absolutely. And most times it's the buyers that don't understand that, especially that loan to value risk, and sustainability. And then, if you have a downturn, you gotta also remember, have a lot of money, be very much in the positive. When you have work, let's say you have $1,000 buffer that you have in order for, let's say if you have a variable mortgage and suddenly mortgage rates spike like they did in the 80s, there were my dad, I believe he had an 18.4% mortgage. It could go up there, guys, it's not going to stay at zero forever, and if the monetary system keeps itself at B and it will survive, it will definitely just spike, as Gregory Mannarino said. Also, debt will spike up through the roof because it will collapse in on itself, and then it becomes unsustainable. As soon as the interest rates goes up, nobody could pay them because they're so over leveraged and they're done. So please understand that your house is not an asset unless you're a real estate investor and understand how to work the system, especially with borrowing it out to others, so you actually get some income back on it. And be aware when if you want to take some money out of your real estate in equity, don't put it into as I said, squander your money. It's dangerous.
And of course, once again, I will say, just for legal reasons, these are our opinions, but look into them yourselves and you'll see that it's quite evident. And of course, we will have to talk with Russell Gray again in the near future from the real estate guys. And bottom line, be very, very careful, guys. Of course, it's the usual advice that we would give is just be very careful. Look into everything that you get involved in because it's a very risky market these days. It's very manipulated and a lot of bad things can happen. More bad things than good, that's for sure.
Understand how money works and how investments work, and educate yourself.
Absolutely. Well, thank you very much, John. This is John Sneisen, signing out from World Alternative Media. Find the truth, be the change.